Good morning and welcome to the Baird Trust Large Cap Equity Third Quarter Portfolio Recap. I'm John Watkins, the co-portfolio manager of the strategy. Jumping into performance, the table at the top of this slide shows our performance track record. In the third quarter, our portfolio was up 0.6% gross of fees and 0.3% net of all fees, compared to the 0.6% gain for the S&P 500. On a year-to-date basis, our performance remains strong, with the large cap equity portfolio up 19% gross and 17.9% net versus a 15.9% gain for the S&P 500. Even though we are very pleased with these short-term numbers, our focus remains on investing for the long term. When our short-term numbers are strong, like today, we don't get overly excited. And when our short-term numbers are lagging, as they have at times in the past, we don't become worried or depressed. This is because short-term performance can be driven by things other than business fundamentals. To us, the most important numbers are the 10, 15, 20, and 25-year performance numbers, all of which are ahead of the S&P 500. On the bottom half of this slide, we've listed our top and bottom contributors for both Q3 and the year-to-date period. Moving on, this slide shows portfolio changes we've made over the past year. You'll notice that there has not been any portfolio activity in 2021. So far this year, we have not found any investment opportunities that are more attractive than the companies we already own in our portfolio. We have turned over lots of rocks and studied numerous businesses, but so far, nothing has met our strict criteria. The second bullet point on the right is a wonderful quote from Warren Buffett, which we strongly agree with. He essentially says that good investment opportunities don't appear on a regular basis. There are times when there are many, and there are long dry spells when they're very hard to find. In 2020, there were several opportunities due to the market volatility, but in 2021, we are now in one of those dry spells. Our low turnover approach to investing is extremely tax efficient, which is critical when it comes to the long-term compounding of wealth for taxable clients. I wrote about this topic in detail in the most recent Baird Trust market commentary. So if you'd like to receive a copy, please contact your financial advisor. This slide shows our current sector weightings as well as our top 10 holdings at the end of the quarter. The main thing to point out here is that if you look at our sector weightings, you'll notice that we look a lot different than the S&P 500. This is on purpose, since our goal is to outperform the S&P 500 over the long term. We must look different than the benchmark. But we do not make any investment decisions based on top-down sector weightings. What you see here is just an output of where we are currently finding the best investment opportunities. So for example, we are heavily overweight financials, which make up almost 31% of the portfolio compared to only 11.4% of the S&P 500. So this is not because we like the entire financials industry as a whole more than any other sector. Rather, it's simply a reflection that there are 8 businesses that we believe are attractive long-term investment opportunities that happen to be in the financial sector. And the vast majority of this 31% weight is made up of the 4 largest positions: JP Morgan Chase, Berkshire Hathaway, Progressive, and Charles Schwab. And finally, just a few big picture comments on the portfolio and our outlook. So for the most part, Q3 was relatively uneventful in terms of news and stock market activity. However, there are several things to keep an eye on in the final quarter of this year. First, there's likely to be further development of government spending bills and new potential tax increases. Second, the Fed may begin to taper their purchases of treasuries and mortgage securities. And then finally, there are concerns that the current labor shortages and supply chain issues will negatively impact the upcoming holiday season. So we know that these issues will impact businesses in unpredictable ways in the fourth quarter and perhaps longer. Fortunately, our investment strategy is not dependent on making short-term predictions about the economy or about government policy. We are aware of these issues and are monitoring them, but our focus will remain on finding businesses and management teams that meet our investment criteria and will help us compound your wealth over the next 5 and 10 years. So that does it for the Q3 portfolio recap. We look forward to reporting our Q4 results to you in January. Thanks so much for your time.